The decision by the Trump administration to implement comprehensive tariffs on imports from nearly all U.S. trading partners represents a significant operational development. This action occurred less than 24 hours after specific electoral outcomes registered for the Republican Party in Wisconsin and Florida. The policy's execution marks the realization of a protectionist economic vision advocated by Donald Trump for 4 decades, centering on the premise that existing free trade arrangements were detrimental to American manufacturing and national standing. This implementation signals a distinct operational dynamic within the second presidential term, characterized by fewer perceived internal constraints compared to the first. The tariff strategy itself constitutes a substantial strategic gamble, an all-in bet that the anticipated short-term economic friction will ultimately result in long-term benefits for the American economy, particularly through a revitalization of domestic manufacturing. The potential outcomes of this policy trajectory are positioned to be a defining element in assessments of the administration's performance. Immediate observable consequences followed the announcement. Financial markets experienced their most significant downturn since the onset of the COVID-19 pandemic. Key international trading partners, notably China, initiated concrete retaliatory measures, contrasting with previous patterns where tariff threats often led to negotiation. Concurrently, documented analyses from economists highlighted potential risks, including heightened inflation and the possibility of recession stemming from the import taxes. Within the domestic political sphere, these events precipitated noticeable reactions. Concerns were articulated by Republican lawmakers regarding the scope and potential efficacy of the tariffs. Conversely, figures within the Democratic Party and associated activist groups expressed a sense of renewed political opportunity, framing the policy as an economic overreach with potential electoral consequences. Planned demonstrations signaled increased mobilization among opposition groups. The president, however, publicly maintained a posture of confidence, reiterating expectations of an eventual economic boom despite the initial market turbulence and international pushback. These complex and divergent reactions set the stage for the unfolding operational reality. The administration's commitment to this course remained evident despite the significant market volatility observed, with public statements reinforcing the objective of a domestic manufacturing resurgence and asserting confidence in the eventual economic benefits. This approach contrasted markedly with dynamics observed during the first presidential term. Previously, the threat of tariffs often served as a lever, drawing international counterparts to the negotiating table to seek revised trade arrangements. The current operational reality, however, saw the implementation itself trigger immediate and tangible retaliatory actions from major economic powers like China, alongside stated intentions from European allies to enact countermeasures. This shift indicates a potentially altered international calculus in response to U.S. trade policy maneuvers. Within the domestic landscape, reactions fragmented even among those generally aligned with the administration's objectives. Some prominent supporters publicly affirmed their backing for the strategy, accepting potential near-term economic disruption as a necessary precursor to achieving long-term structural change, framing it as consistent with campaign promises regarding national economic realignment. Yet concurrent expressions of reservation emerged from other of the president's base. Concerns were voiced regarding the pace of implementation and the potential negative impacts on inflation and interest rates in the immediate term, even while holding on to the expectation of eventual positive outcomes for the nation's economy. This reflects a spectrum of opinion regarding the tolerance for short-term costs versus anticipated long-run gains. Such reservations were not confined to the general public. Specific Republican lawmakers articulated dissent regarding the policy's broad application. Representative French Hill, for instance, publicly questioned the efficacy of across-the-board tariffs, particularly concerning key trading partners like Canada and Mexico, advocating instead for renegotiation of existing agreements and expressing skepticism about the projected revenue generation from the import duties. These statements highlight internal party divergence on the optimal strategy for trade relations. Simultaneously, these developments appeared to galvanize actors within the Democratic Party and associated organizations. The confluence of the tariff announcement, recent electoral successes such as the Wisconsin Supreme Court race, and visible actions like Senator Cory Booker's extended floor speech contributed to a narrative of shifting political momentum. Activist groups like Move On signaled intensified mobilization, framing the situation as a pivotal moment. Strategists and figures within the opposition began actively framing the tariff policy as a direct economic burden on American households through increased prices, viewing this as a significant political vulnerability for the governing party. Progressive groups like Indivisible articulated the view that such broad economic impacts could precipitate substantial political realignments, drawing parallels to historical shifts driven by economic policy choices. The unfolding economic consequences were thus interpreted not just as market fluctuations, but as potential catalysts for a broader political reset. Yet this interpretation stands in direct contrast to the administration's own framing of the events. The stated objective remained fixed on long-term structural economic transformation, positioning the import taxes not as detrimental, but as necessary tools to achieve a domestic manufacturing renewal and bolster national finances, potentially funding extensions of prior tax legislation. The significant drops in financial indices, like the Dow Jones experiencing declines of 1,600 and subsequently 2,200 points, were presented by the administration not as indicators of policy failure, but as temporary turbulence preceding an anticipated economic upswing. This optimistic projection contrasts sharply with the immediate, documented market reactions and the retaliatory measures swiftly enacted by international trading partners. Furthermore, the dynamic observed in international relations marks a departure. Where previous tariff threats sometimes yielded negotiations and bilateral deals, the current comprehensive application has elicited firm pushback and reciprocal tariffs from nations like China and pledges of resistance from established European allies, suggesting a less pliable global response this time. This external pressure exists alongside internal complexities. While of the president's core political coalition, including significant donors like Doug Deason, voiced strong public support, accepting short-term portfolio impacts as the price for achieving a promised national economic turnaround, this view was not universally shared within that same constituency. Other documented supporters, such as Frank Amoroso, expressed clear reservations about the immediate consequences, specifically citing concerns over rising interest rates and inflation, even while retaining hope for the policy's ultimate success, suggesting a more cautious or conditional endorsement among parts of the base. This internal variance extended into the legislative branch of the president's own party. Figures like Representative French Hill articulated specific opposition to the broad tariff application, particularly regarding North American neighbors, favoring diplomatic renegotiation over unilateral duties, and questioning the very premise of significant revenue generation asserted by the administration. Such divergence within the governing party presents a contrasting picture to the consolidating energy perceived within the opposition. Democratic figures and allied groups pointed to recent electoral data points, like the Wisconsin Supreme Court result achieved despite heavy counterspending, and actions like Senator Booker's lengthy floor address as evidence of renewed vigor and strategic focus. They explicitly linked the tariff policy to potential constituent hardship via price increases, framing it as a strategic opening for political gains, a narrative starkly opposed to the administration's portrayal of the policy as beneficial for the average American worker in the long run. The assessment by progressive strategists suggesting the policy could lead to significant electoral shifts reminiscent of historical precedents further underscores this divergence in interpreting the strategic landscape. Delving deeper into the operational context reveals several key dimensions. The administration's policy maneuver represents the operational culmination of a specific economic philosophy championed by Donald Trump over several decades. It is not presented as a short-term tactical adjustment, but as a fundamental strategic reorientation aimed at reversing perceived national decline tied to shifts away from manufacturing dominance. The execution of this policy in the second term appears linked to a different internal dynamic compared to the first. The context suggests a greater degree of presidential latitude, enabling decisions aligned more closely with long-held personal convictions, potentially less mediated by advisors holding alternative economic perspectives. This allows for bolder, more encompassing policy implementations like the across-the-board tariffs. Furthermore, the timing of the announcement, occurring directly after unfavorable electoral results in Wisconsin and Florida, points towards a strategic reaffirmation rather than a reactive shift. It suggests adherence to a core political and economic playbook, doubling down on a foundational element of the president's platform irrespective of immediate political headwinds. This commitment underscores the high-stakes nature of the endeavor. The administration projects success based on a revitalization of domestic industry and enhanced national economic sovereignty, accepting market volatility and international friction as necessary intermediate steps. This long-term vision is posited against the immediate, quantifiable costs observed in market indices and the documented concerns raised by economists regarding inflation and recessionary pressures. The variance in reactions, even within the president's own political sphere, highlights the inherent tensions in such a broad policy application. The unqualified support from some viewing potential hardship as a prerequisite for national gain, coexists with apprehension from others focused on the immediate economic impacts and the disruption to established trade relationships, particularly with close neighbors. This internal spectrum of opinion within the governing coalition provides a backdrop against which the opposition perceives opportunity. The potential for widespread price increases, a direct consequence often associated with broad tariffs, is seen by Democratic strategists as a potent political tool, capable of mobilizing public sentiment and potentially altering the electoral map significantly, drawing comparisons to major historical political realignments triggered by economic distress. Therefore, the situation unfolds not merely as an economic policy debate, but as a complex interplay of long-term ideology, second-term operational dynamics, immediate economic consequences, varied internal political calculations, and focused opposition strategy. Looking beyond these immediate interactions, the comprehensive tariff strategy carries significant broader implications for the trajectory of U.S. economic policy and its position within the global system. The documented negative market responses and formal warnings from economists regarding inflation and recession potential indicate substantial economic headwinds associated with the policy's rollout. Whether the administration's stated goal of a domestic manufacturing renaissance and economic boom materializes remains contingent on navigating these pressures and the sustained reaction of both domestic consumers and international partners. The shift observed in international dealings, from negotiation under threat in the first term to immediate concrete retaliation in the second, suggests a potential reconfiguration of global trade dynamics. The actions taken by China and the stated intentions of European allies signal a possible move away from established free trade frameworks towards a more contentious or fragmented international economic order, depending on the longevity and scope of the tariffs and countertariffs. Domestically, the policy appears to be exacerbating existing political fault lines and potentially creating new ones. The documented reservations among certain Republican lawmakers, contrasted with the unified support from other of the party base, and the heightened mobilization of Democratic opposition capitalizing on perceived economic vulnerabilities, points toward a potential reshaping of political alignments. The ultimate electoral impact hinges on how these competing narratives and the tangible economic effects resonate with different voter constituencies over time. Ultimately, this tariff initiative stands as a potentially defining element of the administration's second term. Characterized in the provided context as an all-in bet stemming from decades of advocacy, its success or failure in achieving its stated economic objectives, balanced against its undeniable disruptive capacity, is positioned to heavily influence historical assessments of this presidential period. The path forward is therefore marked by considerable uncertainty, with outcomes dependent on the complex interplay of sustained policy implementation, international countermoves, domestic economic resilience, and evolving political sentiment. Thus, the operational landscape reveals a deliberate and consequential policy action, rooted in a specific, long-articulated economic worldview, now fully activated. The immediate effects manifesting in financial market instability, swift international countermeasures, and explicit warnings from economic analysts are documented realities, not speculative projections. These tangible outcomes intersect with a complex domestic political environment characterized by unwavering administration assertions of eventual success, contrasted sharply by expressed reservations within the governing party and a visibly energized opposition framing the policy as inherently detrimental. The strategic implications extend across economic, international, and domestic political domains, indicating that the imposition of these broad tariffs has initiated a period of significant stress and potential realignment. The unfolding situation represents a critical juncture where established patterns of trade and political calculation are subject to considerable pressure, the ultimate trajectory shaped by the ongoing interplay between the administration's policy persistence, global reactions, and the evolving responses within the American economic and political systems. Thanks so much for watching. If you enjoyed this analysis, and be sure to give it a thumbs up and hit that subscribe button for more geopolitical insights like this. I love hearing your thoughts, so drop a comment below and let's keep the conversation going. Share this video with anyone interested in deeper perspectives on current events. Until next time, stay informed and think critically. Thank you.